Let's see now how the income statement works, along with the specific financial accounts that we may find within an income statement. Here we have a sample income statement. This is Bobby's Restaurant. As you can see here, the income statement represents the year ending 2013. Remember that if that's the case here, that means that income statement covers January 1 through December 31 of 2013 in this case. And as you can see, I have with different colors the three financial areas that are described within income statement. As you can see, in blue is the income. See, this is income from operations, the so-called sales revenue that we described and discussed before. And in orange, we have the different type of expenses, the second financial area. And in green, I have my level of profit during that period. As you can see here, let's see different financial accounts. You have different types of expenses. The first expense, customarily, that is presented in the income statement is the cost of goods sold. Like the cost of goods sold in the case of a restaurant, as you can see here, is the cost of the foods and beverages that were sold during that period. Okay, so the cost of the items, how much the raw materials that I used for cooking and serving my customers cost me. So it's 242,000 euros. So we have a major operating expense. We have also other operating expenses. As you can see here, we have another expense that relates to my employees, salaries and wages. I have expenses that are of administrative and general nature. You may have expenses that relate to my marketing activities in order to promote my business and attract customers. I have expenses, the so-called utilities expense that relates to electricity, natural gas, water, telephone, internet together. Okay, 59,000 euros. You may have maintenance expenses, like maintenance relates to maintaining your facilities, the building, different types of equipment. You may have also other operating expenses that relate to different licenses and permits that the restaurant needs in order to operate during that period. And on this income statement, we have also a final expense, which is the income taxes. This is a legal expense that relates to the government. And then finally, we have the net profit. To see a little bit the mechanics, see we have different sections here. Let's say this is one section. See here the gross profit or the gross margin as they call it. It's exactly the same thing. So the gross margin is the outcome of sales revenue minus the cost of goods sold. So this gives you 653,000 euros. Here, what I do, I take all my other operating expenses, we add them up, total operating expenses. This gives me 405,000 euros. And also, here you see in blue, income before taxes. This is income before I pay tax to the government. And to come up with 148,000, I need to take my gross profit minus my total operating expenses. And this leaves us with an income before we pay tax to the government of 248,000 euros. Okay, then finally, this is the income tax that you have to pay. And if you take from income before taxes the income tax, this leaves us 173,600 euros. So this is the net income, okay, is the end of the income statement. Of course, there is a possibility that you may have a loss. Like for example, here, in case that you have a higher amount of expenses than the gross profit, it will give you a negative income before taxes. So basically, this is a net loss. If you have a net loss, we don't pay income taxes because there is no income to be taxed. And since here we have a net income amount, remember that now the ownership of the business, the board of directors, if you want, will decide what they're going to do with this profit. Now remember that there are three possible outcomes. Either all of the profits to go to the owner or the owners, all of the profits to be reinvested into the business, to be retained into the business. And of course, there is a third alternative, take some of the profits and distribute it to the owners, and take also the remaining and leave it into the business. So there are three alternatives in case that we have a profit. So this is a sample of an income statement. Now remember, depending on the nature of the business, you may have different expenses. However, remember that expenses always will represent use of the economic resources for the purpose of producing sales revenue. Also, an income statement can be more detailed or less detailed. Like, for example, if you want, you can list a more detailed list of your expenses. Let's say salaries and wages by area. Or it can be also in a more condensed way, like usually in a publication, you don't see a lot of details on the income statement as we see here. Okay, so there are different ways to produce an income statement. Of course, you may decide to use a different layout. Layouts are going to be given to you during this course to see also different ways of constructing an income statement. To conclude, we're talking about the income statement. There are three possible operating outcomes. That means that you may have at the very end a profit or the so-called net income. That means that my sales are greater than my expenses. Another possible outcome can be that you may have a net loss. That means that sales is lower than your expenses. And remember here in this case, you don't pay any income taxes because there is no income to be taxed. And of course, another possible scenario is your sales to be equals to your expenses. Thank you very much.